And that's where we'll start, on the markets and the Fed as the 2024 presidential election heats up. Joining us now here at Post 9 is Howard Lutnick, chairman of Cantor Fitzgerald, BGC Group, and Newmark. Welcome back.
Great
nice
to be here.
You. Also a Donald Trump supporter, an early one from the business world. A lot of CEOs and investors have jumped on the Trump train.
Now they're all joining me, so now it's a crowded train now.
It's a crowded trade, and we're trying to figure out, Howard, what it means if he were to win and we get some sort of Republican sweep for the markets and for the economy. How do you think about it?
Well, you started feeling it now, which is a lower corporate tax rate. Remember, he drove that tax rate down, so lower corporate tax rate is going to extend it. So you're going to see the small caps rally, right? Biden had a great run of the Magnificent Seven, right? And they were sort of carrying us all the way through. I mean, you guys talk about it every day, right? You're going to see tougher on China, right, which is going to hold those back, right, and broaden out the market, and you're feeling it. So that's the rip. The rip is people thinking, hey, if Trump wins, it's going to be a broader market here. It's going to be big for the markets, and up we're going to go. So I think it's really positive. Lower corporate tax rate, less regulation. I think the big seven have challenges, but the rest of the market's going to rock. It's going to rock.
I don't know. 10% tariffs across the board could be not so friendly for growth.
Yeah, but, you know, Donald is a deal maker. You know, the president's a deal maker. He wants to make a deal with China. You know he wants to make a deal, but he called out China the last time. I think there's a deal out there that he's thinking about and that's working on, but he's going to start tough, and then he's going to make a deal. And I think he cares about business in America. I know he cares about business in America. He cares about regulation. And I think people are not remembering that enough, how he had a rule, remember, for every one regulation, you got to get rid of two. Right? Do you remember that mantra?
Yes.
I think that's coming back.
He also cared a lot about the stock market.
He cares a lot. He cares a lot about the stock market.
I guess one of the questions, though, is the deficit, which investors care more about lately and are paying attention to. If we do drop that corporate tax rate, right, extend the tax cuts, will those concerns about debt come to the fore?
I mean,
do you have those worries?
Actually, think about it. We're running like 1.9, 1.8 trillion. We've added $1 trillion to the numbers we used to talk about 4 or 5 years ago, right? We used to talk about $900 billion deficits. Now we talk about 1.9 trillion. The market is buying the treasuries. You feel it, right? 10-year note was 5% when everyone was talking about it. Where's it now? Right?
4.1.
Much lower. So the market's buying treasuries. Right? The market, the world loves treasuries now. I think the answer is it's okay. The interesting answer is it's okay. And we feel okay. The market feels okay. The deficits are not weighing on us. So I think the Trump administration, if they win, will have a nice long runway to execute a whole lot of things that they'd like to do.
So in other words, you don't need to worry as much about spending. You can grow your way out of it. You can protect Social Security, Medicare, all of that stuff, entitlements?
Yeah, I think you can lower corporate taxes, bring back business to America, bring it back to America, which you saw last time, and that's going to spur growth, and that pays it back on the other end. So I think basically they view it as economically positive to cut taxes, meaning we'll get more revenues in. But the answer is, look, we're doing okay with 1.9 trillion. So I think, you know, it'll be a little lower under President Trump, but the fact is, the train is running hard. You feel it everywhere. You know, all sorts of people used to tell me, oh, I can never be on that bandwagon. All of a sudden, they're standing behind me. I'm like, when did you join me on this bandwagon? And so I think it's very positive, very strong, and I think, you know, I think it's going to be good for America.
Journal op-ed today writes about Vance and what he adds to the ticket, whether or not it will be a jump ball, as the Journal says, every day about free market capitalism and what they're calling GOP populists, GOP statists, protectionists. Will it be a mix of policy? Difficult to read?
Oh, I don't know. You know, I don't know. But J.D. Vance brings youth. Imagine we've all been talking about, right, the 81-year-old versus the 78-year-old. I mean, how great is a 39-year-old? Right?
Well, he'll be 40 in a couple weeks.
Okay, he'll be 40 in a couple of weeks, right? But served in the military, right? Went to big university, served in the military, and then goes to Yale Law School. I mean, so in the military and Yale Law School, and a great talker, and great Midwestern values, and living the great Midwestern values. I think it brings a lot to the ticket. He's a first-class person. He's a big supporter of Israel, which is obviously a key thing for me. Big supporter of Israel. So I'm a great fan of J.D. Vance's and that selection by Donald Trump. I could not be more proud and happy with that choice.
You're in a good mood today, Howard. So let's talk about commercial real estate, which you have a good handle on, chairman of Newmark. We were just talking to Bruce Vance of Citizens. Some increased credit risks around real estate for these banks. That's been a theme this quarter. But he did say that it's
at least. Wow.
How bad is it out there?
Okay. You had all these banks for 14 years. People were lending against zero interest rates. 14 years. So if you waited 2 years, 3 years, 4 years, sooner or later, everybody's in the water. Okay? Interest rates go up 5%. So we all know what real estate is, right? It's a breathing bond. Okay? It's just a bond. And we know why Silicon Valley Bank went out of business. You buy 30-year bonds and interest rates go up, the value of bonds go down, and they got crushed. Yep. So real estate values are getting crushed. And it's math. And there's no 0.25% cut in September that's going to make a darn bit of difference. Not a darn bit of difference. There's no difference between 5.25% and 5%. So you're going to see huge defaults, huge levels of defaults, and there's nothing anyone can do about it. So the big banks and the big regionals are reasonably well set. But the thing that's difficult for people in the real estate market is they used to call their local bank and they'd get their loan. Now they call the local bank. You know what the local bank says when their loan comes due? We don't do that anymore. Right. Imagine we don't do that anymore. You say, no, I've got a $12 million loan on my building. I need to roll my loan. They need to find money. And so Newmark's business. So Newmark does three things, right? We sell buildings, broker, we finance buildings, and we lease buildings. And the financing buildings business is on fire. Fire. Up 50% last quarter.
Getting out of the business.
Because most of the banks aren't lending, so you need to find money. And you know where we're finding it? As an example, Korea. Like, you need to cover the world to find the money, to find people who want to lend against your building, right? So Newmark's lending business is on fire. And people don't think of like a real estate broker. They will find you the money. So if you need money, and everybody needs money to refinance their real estate, Newmark's business is really popping in that area.
Is there any level of recovery in vacancy or occupancy trends that can help?
No, this is
your point about a quarter point.
Okay, so think about it, right? You have a building that's earning $5 million. Okay? So at a 5% interest rate, it's worth $100 million. At a 7% interest rate, right, it's worth $78 million, $75 million. I mean, think about it. Just what happened? Nothing. Nothing. The building just went down in value because rates went up. Same rent, same block. You didn't move the building. It didn't grow or shrink. Same everything. It's just interest rates change the outcome. So if you had borrowed $60 million on that $100 million building, no one's going to lend you the 60 anymore because the building's only worth $70 million.
But we
so
haven't seen the 45. Defaults. We haven't seen these big defaults
Not yet. Not yet. Because it's coming.
They're extending it, aren't they?
It's coming. So the wall, think about it, 10 years ago. Just always think 10 years ago. So 2022 was 2012. It was starting to rock. 13, 14, it was really rocking. 2014, it was rocking. 2025 is going to be a wall. It's like, when is the big wave coming? We're all swimming kind of nice, kind of big waves. And if I tell you this tsunami is coming, right, you'd say, well, I don't see it as I sit here right now. It's sort of like when you were growing up and your mother came and you were playing outside and it was really dark and she'd say, got to come in, and you'd say, why? It's not raining. She goes, it's coming. It's coming.
That's
Let me tell you, 2025 and 2026.
What if rates could go down before then, all the way?
50 basis points?
Not enough.
No, it doesn't change. Remember, it went up 5.25%, 4.75%. 50 basis points better. I don't change one word of what I just said. Not one word. And resi is like another whole world to talk about, right? People are not moving in residential. Why?
They have low rates.
I'm not giving up my 3% mortgage, but in residential, you take a 30-year mortgage. In commercial, it's all 10. All 10.
So that's a problem. Howard, before we let you go, I want to talk about your new endeavor because you are, I mean, you've got a lot of businesses going on, but you have a new one, which is you're a trading exchange. You're going up against the CME.
Right.
Why are you doing this? And you've got a lot of big Wall Street backers.
Okay, so it's called FMX, and it's part of the BGC Group. So BGC Group is public. FMX. So in America, rates, right? Interest rate swaps and U.S. Treasuries. The Futures Exchange is the Chicago Mercantile Exchange, worth $80 billion. A perfect monopoly. They do it all. So BGC is an exchange for everything in the world that doesn't trade on an exchange. You'd say government bonds, where? Everywhere in the world. Corporate bonds, foreign exchange, commodities. If it doesn't trade on an exchange, BGC doesn't. So we launched an exchange to compete with them. We got full approval in January, and in April, 10 of the largest trading firms in the world, 10 of 10. That's JP Morgan, Goldman Sachs, Morgan Stanley. You got the list, the greatest list, plus Citadel and Jump. You don't know, most people on TV, they don't know Jump and Tower, biggest futures traders in the world. They all became partners. In April, they invested $172 million to buy 25% of the exchange, and we're opening in September, and it's so much fun. I mean, it's incredible because we already have the system connected to everyone in the world, right? We're ready to go. We've got cross-margining set. We've got every piece of the puzzle set, and that's how do you get 10 of 10, right? Like I always, when people say, what do you think it's going to be worth? I said, when George Clooney invested in a tequila company. You remember when George Clooney bought the tequila company?
Yes.
And then what's it worth after George Clooney comes in?
Well, Diageo can tell you.
Right. So what I do is I look at Goldman Sachs, Morgan Stanley, JP Morgan, and I go, George Clooney. They're my George Clooney.
Are we going to get some volatility by then? Because that would be helpful, right?
For you? It's fun, but I think the issuance on U.S. Treasuries and the issuance, these $1.9 trillion mortgages, trillion dollar deficits, are going to create volume and volatility. It's just a matter of time. So I think while inflation is slowing, we all agree, and a rate cut, remember, the Fed is cutting their balance sheet, right? Issuing less money, so they're pulling it back. So as that's tightening, right? So if I cut a little and I pull back a little, cut a little and pull back a little, what have I done, right? I say to my kid, I'll raise your allowance, but you can't use my credit card anymore. You're like, what was that?
So you're saying rate cuts are a wash, in a sense.
It's literally an economic wash. It's showing off. That's why they're going to do it in September. It's just showing off. I'm pulling back and letting go. Pulling back and letting go. They're doing nothing. This is literally a nothing. And that's why it's showing off. And that's why when people were saying 7 rate cuts, I thought it was a ha-ha, as in, no way, no way. We're sticking here. The economy is good. The markets are good. Rates are steady here. Real estate's going to be a debacle like there's no tomorrow. People need to borrow money. They need to find it, and that's why Newmark's on fire. And BGC Group, we've got this cool new exchange. It's coming in September. We launched our treasury side of that exchange already. North of 30% market share in June. North of 30 against the heavyweight champ, the CME. So no one else has ever said they've gotten a glove on the CME. I don't know. To me, 30 points market share, sounds like a glove to me.
Yeah, especially in anticipation of this launch. We're going to have to get Terry Duffy back on soon.
Just don't mention my name. He's going to say nasty things.
Howard, we're going to have to talk more about it leading up to the September launch, but thank you very much. It was great to talk to you.
Great being here.
Good stuff, Howard.